I'd like to welcome everybody to the Ball Boys here, giving out the best DD from across the stock world. We are retail traders, and all the information that we bring to everybody is for retail traders. We are 100% all about retail traders, retail market. We want to do whatever we can to help you find the information that you need to make the best decisions you can make. With us today, we got Chad and his lovely green clover hat. Um, we're gonna be going over some things today. What's going on across stock world? What's going on across the market? Things like that. One of the things that I want to kind of start with, Chad, is something we're seeing in the news every day now, and that's Evergrande. And as far as what's going on with them, I mean, do you think, because all we keep hearing about is contagion? I mean, do you think that's a possibility, or what do you think? You know, what do you think that the possibilities of that happening is? And can you kind of touch on that, and then also touch on, basically the whole sector in general as far as the Asian market over there?
Yeah, I want to say first off to start, thanks for bringing me on. Really appreciate you guys having me on,
Yeah.
and just to answer your question there. So we're seeing a lot of different things in the news with Evergrande. We saw Monday, we saw the whole market red. So we saw contagion, the global crisis, but then we saw a rebound from Evergrande later this week. So they said that the bond that they were going to pay 35.9 million, excuse me,
Of the
35.9,
85 or whatever it was.
5.5 million. However, like we're seeing now, so like we see, oh, everything looks good. Leverage party continues after Monday's scare, right? You institutional investors are still yet to get paid. So I don't know why this party is continuing, but there's still a dark storm here, still looming. We also have seen the whole sector too, touching on that. So we all know Evergrande is ticker is HKG and 3333. We also take a look at another ticker there in the same sector, HKG 2103, called Stonic Holdings, was down 85% the past week. Ooh. And yeah, and they actually got to 50 cents, and the Chinese government actually had to halt trading. So you could see something's going on here.
Because Evergrande is down like 80 some percent right now, aren't they?
Yeah. Evergrande's down like around 80% for the year. They're trading roughly around the $2.50 range. For that, they were trading around like $36. So you could see this massive drop off coming. Another thing we saw this week that really solidified, I believe, what we're seeing with China is the destruction of the buildings. So we saw last weekend, literally the Chinese government dynamiting these ghost cities, like just destroying them. So at the same time, you have Evergrande executives redeeming dividends for $8 billion, asking their own employees, give us cash or lose your bonuses, and then saying they'll repay investors with ghost properties, but at the same time, they're turning around and destroying them. So,
and all the workers have stopped working.
Yeah, that too. So what we're seeing here is something we really haven't seen, and to me, it really seems like this whole house of cards is coming down. We have banks like HSBC, Morgan Stanley, where we see collateral absolutely so correlated. And then we see many other banks very correlated. We got 129 banks that have exposure to Evergrande. You see in the media outlets calling it China's Lehman moment. I think it might be actually something more significant than this.
And why is that?
And I say that because since China's going down, it seems like their whole economy is going down. We saw this week they had $12 billion, not yuan, 12 billion USD injected into the market, in the Chinese market, to give them more liquidity. But we are now seeing aggressive action by China towards Taiwan as well. So it's making me believe that something's happening, and this isn't no FUD by China. This is they're not lying when they say we're going down. And I really think that China will look to maybe striking while the iron's hot. We saw last night one of the largest reported from Taiwanese, one of the largest fighter jet shows. So they had a whole fighter jet squad fly over Taiwan last night. We have Australia mobilizing nuclear submarines in the South China Sea. We had Joe Biden, we had Boris Johnson, and the Australian Prime Minister all meet last week too. So it seems like the dots are connecting to be something very significant here, opposed to just a financial crash. We also see propaganda in China now. So there's no more boy bands anymore. There's no more, I guess, Western culture now. It's, North Korea style propaganda. We've all known they cracked down on the social system with the social credit score. But now it's becoming fall in line or go missing, almost like in North Korea. So
right. So what are the ramifications of this market wise? As far as what's going on, and how's this going to affect the U.S. banks that are involved in this?
So that's a good question. So you have all these other moving parts, like I was just talking about, but getting back to the markets, I personally believe, this is my opinion only, that this is going to lead to something very significant. Like I was saying, we have multiple banks with collateral correlated. Over 120 banks are exposed to this. Over 120 non-lender banks exposed to this as well. How much is yet to be seen, but I'm assuming it's pretty significant since all the power heads, Ken Griffin, Larry Fink at BlackRock,
right,
are essentially all in this. All went to China last Thursday. So they probably talked about this, and that was before we saw the contagion on Monday too, or the fake contagion, I like to call that, because we didn't see it on Tuesday. But the prior week they were in China discussing this, and it seemed like they wanted to get their money, and Evergrande said it would give them their money, and they still have yet to get it. So they got 30 days now to.
That was due on Thursday, right? Yesterday.
Yep. So excuse me. They would have 29 days now to make a payment to these institutional investors, or we'll experience a default from Evergrande, and possibly a default I can easily see in the whole China sector. So something very significant as well. And that's not to mention, I know you probably wanted to get into this too, our own problems back here at home that we're experiencing, with government shutdowns, a possible default at our own. So we're really seeing the dominoes line up for a black swan event here, with the meme stocks, with Evergrande, with what's going on here, inflation. So
yeah, because it
coming in.
Yeah, it did, with Monday. I mean, because the whole market went down. Now we ended the week with, as far as the market itself as a whole, up for 3 straight days, the last 3 straight days of the week, which is good. But those first 2 days, Monday and Tuesday, was pretty rough. Now, going into the market, some of the things that I want to talk about is, near and dear to my heart, because I'm heavily invested in Clover Health, ticker CLOV. Exactly. There we go. And so some of the things that I kind of, want to talk about is like the short interest. How's the short interest being gamed? Why are we seeing these big buy orders, after hours? I mean, what's going on here?
Yeah, so that's a good question. So I really believe that short interest is being gamed, and it's all centered around a formula that includes short interest, days to cover, and average volume. So you have retail place an order, usually through a broker dealer. So once the dealer places an order through the broker dealer, it either gets immediately lent out if your lending is available, or it will go to a dark pool. So once it's in the dark pool, then the institution takes the buy order, sees pretty much how much it is, and controls it by putting it into the formula like I previously mentioned around short interest, days to cover, and average volume. So they don't want to see average volume too high, because that means the stock price will go up. They sent it to the lit market, not to the dark pool, the stock price would go up. If they short it too much, days to cover goes up. So you see how one thing can affect everything. So it's all being maintained, and any excess is parked into the repo market, then sold off via swap, via tri-party, and then held on an investment bank's balance sheet, like Goldman Sachs, UBS, JP Morgan, and they hold that liability on their balance sheet. And the cycle eventually will start over. So that's why I know the mods have been, of our CLOV have been very adamant about pinning DRS to the top, making sure people register their shares, and then pretty much just making sure what is yours is in your name, and know what you own. So
as far as the DRS goes, you know, because I know back in the day, you'd have to, for me specifically, when I owned some shares back then, I would have to, like if I wanted to sell a share, I physically had to sign this piece of paper and send it back in. Have you checked to see how that's kind of done now, or what do we as retail investors, if I register my shares, what do I need to be concerned with? Anything?
Yeah. So that's a great question. So us as retail investors, like I said, it's very important to put the shares in your name, just so they can't be lent out. We've seen reports of cash account shares being lent out when they shouldn't be. So directly registering your shares puts them in your name, and like you said, you'll get a physical certificate. But as a retail investor, you know, full transparency here, obviously. It's going to take up to 72 hours to sell the shares. So I actually spoke to the transfer agent of Clover, which is Continental Stock Trust and Transfer. They told me that you could transfer your shares. It'll take 72 hours, and it'll take also 72 hours to sell your shares as well. So you would have to call them, send in the certificate. They would place a sell order for you when you would want to sell, and then once they receive the certificate that you sent them back, your shares will be sold. But your shares are always secure, and you know that they're not being lent out. I heard a report about fast agents being able to draw down for liquidity. I'm still looking into that a little bit more. I don't know how true that is, that fast agents can draw down. I actually asked the DRS lady, and she said, we just hold your shares in your name. So it's leading me to believe, hearing it from the horse's mouth, that the shares are in your name, and that's final. So it's obviously up to the individual, in my opinion. If you want to secure your shares, I know for me personally, I want my shares secured. And if MOAS is happening, or you know, we see a squeeze in CLOV, I know the apes will hold until they get what they want. So because we haven't been holding for this long to maybe
Right.
reach 50, 70. You know, we want the whole pie. So
Exactly.
I've also seen AMC, GME already being priced in on the Fidelity probability calculator of roughly around 39% for both, with GME having, like, sounds ridiculous, but GME being 16,000 a share and AMC being 2,000 or 8,000 a share. So and
Yeah,
Fidelity
that's ridiculous.
39% probability of that. So crazy times that are ahead.
So for those who don't know, where do you go to find the transfer agent?
You can go to Clover Health's website. Once you go to Clover Health's website, you click on corporate governance, and under corporate governance, you should see a whole list of, you know, investor relations, their transfer agent, press contact information, all the stuff that an investor possibly would need to see. Usually it's for an institutional investor, but, you know, here we are in a special case where we want to directly register our shares and put it in our name. So this transfer agent, again, Continental Stock Trust and Transfer, also available on Clover's website if you wanted to just go look at it as well.
Yeah, and that should be true for really any ticker. You should be able to find whoever the transfer agent is, typically from the website business part of it. Yeah, I mean, if you're not registering your shares, I mean, you're not doing yourself a service. You're actually doing yourself a disservice.
I honestly feel that, you know, maybe you're actually hurting other apes maybe as well, because, you know, they think, oh, well, I won't register my shares. Maybe I'll put them in somebody else, some other apes will
Right.
be, I'll wait. We're all on the same team here. We all need to be coordinated because we're fighting a market maker at the end of the day. We're fighting a powerful oligarchy that is the United States government as well. So we got a
Exactly.
tough challenge we're facing here. So we need to
Yeah, no
use
doubt, man.
every
No doubt.
possible ammunition we got.
So moving on to our roll dates have passed. September 17th was a roll date. That's came and went. Everybody was, hoping that something big was going to happen, around that time. I mean, since that's already come and gone, I mean, does that theory still apply or what's changed?
Yeah, I believe so. It actually still applies. We actually saw the run up to $11 right before the roll period on the 9th. So I believe that might have been some people rolling over the swaps, but I feel like since the volume wasn't so significant, they might
Right.
have just let these expire. So the expiration was on the 17th, and after it expires, they get T plus 35. So I'm not sure what 35 days would be. I think it's October 26th, but please don't quote me on that. But I really think that we could see something coming up here soon. Just looking at this week, it was just a weird week. You just got this weird feeling
Yeah.
with what's going on. It just didn't seem like a normal week.
No, between Evergrande, between the debt ceiling, the feds, and everything going on, because this is, I mean, everybody should be paying very close attention to what's going on as far as the debt ceiling and everything. I mean, because I hear a lot of speculation about default and debt default and everything. And I mean, what would a U.S. debt default look like for the
Yeah,
markets?
so that's actually a great question, since it's never happened in the history of the United States. So it would be something so unprecedented that I don't even know how to foresee that. But I really feel like what will happen is you have 30 days after a default. So say if they want to, I'm just making up numbers, but like let's say if they wanted to raise it by, let's say 10 trillion, maybe the GOP, who is trying to block it, maybe they give the Democrats, let's say, I don't know, 3 or 4 trillion to raise it. So we did see a increase in the overnight repos double. So we saw an 80 billion to 160 billion overnight repo increase this week. And we have that, like you're saying, we have that vote for the debt ceiling coming up, and we also have the U.S. government's fiscal year ends on 30th as well. So a bunch of the catalysts are coming up, and that's not to mention we're also rolling into Q4 earnings season as well. So in my opinion, this might be wrapping up here soon. Obviously it's to be seen, but if you think about it, like in a box, and the person's in the box, the walls are just closing in, and it's only a matter of time, because we got China we got a great company in Clover Health from the north, we got the apes from the south, we got China from the east, and then the SEC looking into closing payment for order flow in the west. So the walls are closing in.
They
That's
are.
what I'm saying.
Yeah, no doubt about that. So, I mean, you've mentioned repos a couple of times. I mean, we've seen all-time high repos this year, really, from like the end of March, beginning of April to, I mean, just exponentially, just shooting up. Can you touch on that and kind of
Yeah. So
educate us a little bit on what's going on there? I can pull up a screenshot too.
yeah, if you want to just maybe show everyone so they could see the graph as I go talking about it here. But we had the SLR requirements. We saw those get passed there we go. We saw those get passed around the end of February, as GameStop, we know, was right in January. So at the end of January. So we saw after these SLR requirements get passed right in February, right in March, end of February there, right when the SLR got passed, we've never looked back, and we've seen
Yeah.
historic levels,
I
as
mean,
on the screen, just climbs higher and higher and higher, and it's never looked back. If you go back, if you click max on the chart, You could go look at 2008 when quantitative easing. It's up towards the right by edit graph, a little bit to the left over there. Yeah, there you should see a little bit to the left. You should see max.
Right, there we go.
Yep, there you go. So if you take a look over at 2008, you see nothing like this, and that's when quantitative easing was introduced, was in 2008, and you would expect, coming out of the greatest financial recession we've seen in the past 10, 20 years, you would expect reverse repos to be high, or these repos to be high. You could also take a look at the New York Stock Consolidated Stock Exchange, or the New York Stock Exchange Consolidated Short Interest. A little bit of a tongue twister there. There's a bunch of data, bunch of data. But if you download it yourself, you could easily go to their website and download it yourself. And if you add up all the numbers, you can see the short interest for this year. I always say, don't take my word for it. Go look at it yourself. But you could see the short interest for this year has been this high. And we take a look at the S&P and the Dow, and we've been on an absolute bull run. So how has short interest been so high? Why has it been so high? And it comes back to what we were talking about earlier, is to suppress this average volume, and it all applies to this formula. So we see these absolute massive repos, and that's where they're parking it. And like I said, anything other than that turns into a swap via tri-party, and then held on an investment bank balance sheet. So we see the synthetic ETFs, we see micro E-mini futures. Those are all part of the swaps that are pretty much the toxic assets that the investment banks are holding. So you see they have Evergrande holdings, they have this. So it's like almost like a game now of hot potato, who's holding the bomb when it goes off. So
yeah, there's a whole lot of hide the weenie going on with with the stock world right now. I mean, it just seems like, once GameStop had its run up, and AMC, and then Clover. I mean, it really started with GameStop, but once that had its run up, and there was a lot of hedge funds that got burned. There was a lot of them that got burned. Well, I know I saw the one article that the one went out of business. But a lot of them got burned. So they started figuring out other ways to not let that happen again. So it's just, it's a whole lot of, like you said, hot potato. It's just, hey, I don't have it. You know what I mean? And it almost makes it impossible to track, because there's so many avenues that they can go through, and tributaries that they can kind of hide these shares. And it's gotten kind of ridiculous.
Yeah. And another thing I wanted to mention too is, so we know they can naked short through the derivatives and swaps, but we're also now finding out that, no hate on our Canadian friends. We love we love all our Canadians, right. But we have naked shorting being legal in Canada. So we have brokers like Interactive Brokers being located up in Canada. And, I have a suspicion that orders are also being rerouted there from the dark pool. So the Interactive Brokers, is taking orders from the dark pool, lending them out, and naked shorting them. So we have kind of like a whole circle of going on. So like you said, it's been very, very hard to track. But from the U.S. standpoint, Reg SHO banned naked short selling. So now it can only be done through a derivative. But if you actually naked short the shares, as we saw in GameStop, it can lead short sellers to a higher return, but it also could be very expensive for them, as we saw with GameStop back in late January. So
yeah, no doubt.
And what blows my mind too is how no one got in trouble. The short interest was over 200% at one point.
Right.
Reg SHO banned that. So I don't know how no one was talking about this, but we also have Citadel finding out that Citadel lied during the congressional hearing when they said they had no conversations with Robinhood about GameStop.
Correct.
We now are learning that is completely untrue. So
exactly.
It points to, where's the accountability? No rules. Rules for thee, but not for me. So
yeah, that's it. Don't do as I say, not as I do.
Exactly.
But, and that kind of brings me to a point, because what I've been seeing a lot, I mean, inflation now is all time high. It's going up. We're seeing, prices go through the roof for everything. I mean, what do we got to look forward to in the near future with inflation like this, and people being out of work, and the jobless claims coming out every single month? They're, get higher and higher, and they're expecting it to be lower. I mean, what are we looking at here?
So we're looking at, I was reading a post on Reddit from an ape who actually works in a grocery store in the meat department. And he was saying that the grocery store he works at is actually by a college campus. College kids, want to have a cookout, some beer. Who doesn't love a cookout with some steak, some beer, especially on Sundays watching the football, watching
some
NFL.
Natty Light.
Yeah, right. Who doesn't love that? But we're seeing now tip steak from, he was saying $5.99 a pound, now over $10.99 a pound. We also see other people saying, I saw one person who keeps a ledger of all his receipts, since he's very loyal to brands, and he's seen now a 12% increase in the food he's been buying. So we're seeing crazy stuff happening too. We're also seeing off the coast, right off the port of Los Angeles. We're seeing shipping containers get backed up. We're seeing global supply chain absolutely crippled. We have the labor force not working. We have near record people not working.
Right.
Obviously, unemployment, that's not, including a crisis, because technically we're not in a crisis right now, but
Right.
we're seeing very high unemployment. We're seeing a boom in the service sector and a diminishing labor sector, but at the same time, we're seeing this bull run. So to get back to inflation and just pointing all these out, it seems like this inflation is everywhere now. It's it's blocking shipping ports and supply chain issues. We see steak at the cheapest steak you get now at $10 a pound. And your pal saying it's transitory. Like, personally, I don't see it. And how much more can this go before Americans start getting priced out of eating?
Yeah. Well, that's it. I mean, it's coming down to it. I mean, and we've got all this craziness going on with the feds, and postponing the debt ceiling, the vote, and that's going to be next week now. Yeah, it's a crazy world out there, and we just need to basically buckle up and prepare for. Always prepare, yourself, but that's how I am anyways. I mean, I'm always going to prepare for the worst and hope that it doesn't happen. But I want to talk a little bit about our favorite ticker here, Clover Health.
So I've actually been more bullish the more I look at this, because just based off of this simple theory.
Well, we closed at 773 today.
Yeah, so minus all the swaps, the E-mini futures, all the technicals, we got how they attack the shorter ladder attack, we got trade at cash open, aka taco, minus all of this, right? Minus all this. I heard somebody say, I actually heard somebody at the bar the other day say, who's actually an AMC, he told me, he goes, every Friday apes get paid, right? Now, how far can they kick this can down the road until, people every Friday just dump it? How long can this continue for? Just based off of that simple theory, like, and it has no backing with data or anything behind it, but it stands true because, I do it every time I get paid. I put some in, I put more in, and I bet everyone does the same too. Once you get your check, you got your money to live. You put your money into CLOV, AMC, GME, whatever. And you just keep adding. And like I was saying earlier, just the box keeps getting smaller and smaller and smaller for these hedge funds. So how much longer can this go? And so every time it goes lower, why I get more bullish means that now apes can buy at a cheaper price, and apes can buy now more of whatever meme it is.
Well, and that's it's what, like $2.28, 27 cents below IPO, isn't it? Because I
Yeah.
mean,
So what we
don't they
closed
all
at
own it
what?
like $10? All the
Yeah,
insiders?
yeah. So we look at other SPACs. Like the metals company was another meme, ticker TMC. Before we saw Wall Street Bets hop on that one, we saw that pretty much being seller boxed around $10. But you know, I know the Ball Boys bought on Palantir, but that was another D-SPAC that came out that is now $27, $28,
Yeah.
and leads me back
They
to
had a
close.
they had a run up to 45, I think,
Yeah,
somewhere
yeah.
around
And it
there.
leads me back to talking about CLOV was what bad news have we heard? We've only heard good
Yeah,
news.
right.
We've only been crushing earnings.
Yeah,
Why are we so
140%
low?
year over
You know?
year increase. I mean, the lives under management. They're the largest direct contracting, aren't they?
Yeah. So we're now in more counties too. So it
Yeah, they
brings me
just
back.
doubled the counties.
Yeah,
They
yeah.
doubled the double that they did.
Yeah, yeah.
I mean,
So,
at some point, yeah, it's going to come to a head. I mean, there's only so much that they can take. I mean, I think they are trying to kind of figure out a way to shake as much retail out of this stock as possible. Um, and at some point, they're just going to have to throw their hands up and say, okay, we can't do it. Because really, that's what they're
and
hoping that they can do is.
no, and that's a good point. So the market cap currently is 1.96 billion. I just looked it up on Google. How much longer before revenue catches up with the market cap of the company? Uh,
Right.
like I can only see us going up from here. Like this is the bottom. We're in the basement right now.
Yeah.
And I like to bring up this too. If you're thinking about your conviction, right? Take a look at AMC, GME. No hate on them. No hate on them at all. We're all apes. We're all on the same team. We all want to see all the meme stocks succeed and retail get rich. But at the end of the day, AMC's a movie theater chain that needs to innovate, and same with GameStop. It's a brick and mortar video game store that needs to innovate. And thankfully, retail saved them. I know
Right.
AMC and GME growing up. Those are my childhood. Buying games at GameStop and taking girls to dates at AMC. My first kiss was at AMC. So, but it leads me back to Clover. So if those are 40 and around 200 respectively, why are we at 7? We
Right.
are fundamentally, a growth company that's absolutely
Hyper growth company.
hyper growth. Yep. Thank you for correcting me. That's good. In my view, going to take over the industry. We have old and
Yeah.
stale United Health, Humana, and then we have an excellent company in Clover with the revolutionary technology. With it being in the Clover Assistant, like we've seen CMS. So good news on top of good news, and you're holding an absolutely great company,
Yeah.
with tons of upside potential. So your conviction, I think, should only get stronger, and the lower it goes should only make you more bullish because now you can pick up more blocks of Clover shares at a lower price. That's how I
Well,
see it.
and yeah, and for me, it's when I initially invested in Clove, I never even considered a squeeze. To be completely honest with you, I sat through it when it ran up to 28, and I didn't sell because I felt that the company was worth more than $28 a share. So I couldn't see myself selling, and then now granted, in hindsight, I could have sold at 28 and bought back in at, you know, s- seven 773. You know what I mean? So in hindsight, yeah, but I still felt that there was more value in the company than $28 a share. So I didn't find it feasible at that time to get rid of my shares. But for me, it's always 100%. When I originally bought in, initially bought in, it was 100%. It was a 3 to 5 year hold for me, is how I looked at it. And I buy stocks like that I'll sit and I'll buy, and it's a 3 to 5 year hold. And if I'm going in short term, then I'm going to go in for a month or two, because those are my short term stocks. I got long term stocks, and I got my day and swing trade stocks. And that's kind of how I set up my portfolio. Then I use certain platforms for my long term holds, and then I use another platform for my short holds and my day and swing trading. But yeah, it's 100% always been a long term hold for me, and it doesn't bother me at all. Normally if I wasn't involved with, with the communities and stuff like that, with our CLOV and the Discord and everything, I would have set reminders on my phone and went on about my day. I would have never even paid attention to the stock. And I've done that. I've done that with plenty of stocks in the past, for the past 25 years. So it doesn't bother me to sit on this for 3 to 5 years. I'm not looking to, make a quick buck on it. This is something that's going to make me a substantial amount of money in the future. I know it, just because of the fundamentals of the company. And that's why I went in as a long hold. I didn't even know, I didn't even, like I said, I didn't even consider the squeeze. It had nothing to do with the squeeze. It wasn't a short-term payment for me. It wasn't a get-rich scheme. It wasn't anything like that. If I wanted to do that, then I'd go and swing and day trade on AMC, which I have. But yeah, as far as the volatility, I understand that some people just aren't used to this type of volatility and stocks. But if you understand the fundamentals of the company, you've done your DD on the company, you've seen everything, the news that just doesn't stop coming out. Every week, it seems like there's something that they put something out that you're like, God, and then the stock goes down. So just, not financial advice, but you do what's best for you, as far as your money goes. But for me, like I said, it doesn't even phase me. Not going to phase me. I'm in it 3 to 5 years minimum.
And that's,
And
yeah, I was going to say, that's what I like to tell a lot of people too, that, you're in a squeeze play too, if you're in it there. And if you're not, say if it never does, right? And let's say it never happens, all the talk of the MOAS was all wrong. All the theories were wrong, right? Worst case scenario, at the end of the day, you're holding a great company. So
that's it.
Yeah.
You're holding a great company. And look, if a squeeze happens, icing on the cake. But
Correct.
for me, like I said, when I invested the money that I invested, and continue to invest, it wasn't all the money that I had. It was money that I have set aside specifically for stocks like this. So when I pull money out of another stock that I've been holding for the past 2 or 3 years, and it's hit where I want it to hit, and it's just plateaued, I'll pull my money out of that. And then you know what I mean? For me, it's like a little, it's a rolling wheel, man. It's a domino effect. It just keeps rolling and rolling. And that's how I do it. And that's how I've done it forever. And that's how I'll continue to do it for probably the rest of my life.
And I think that's the best way. That's the best way for new traders, and anyone new to the stock market, really, to just learn. It's just keeping that constant wheel of income, like you were talking about, rolling. Because I was actually listening to a motivational video the other day, or someone had it on, and I heard someone talking about how a salary is almost like a drug that they give you to keep you there, as opposed to financial freedom, which the whole APE movement is about and fighting for. Is, like you were just saying, there's tons of different stocks other than CLOV.
Absolutely.
I appreciate the ball boys covering everything, and not just CLOV. CLOV, we're in CLOV now. A lot of people like to talk about it, but it's not the only stock out there. There's a bunch of others. I know you guys bought on
a lot of big plays out there.
Yeah, a lot of great companies out there. And I know the ball boys want to talk on all of them and speak as much name as possible. So, like you were saying, that consistent wheel of income is very important to an investor. While you're still working, and while this is still going on, this play, there's other plays after. If this is your only play now, there's, we want to hopefully bring the best DD to you guys. So I know that's what the whole show is about. So we want to
bring the best of the best. I like to consider the ball boys the center of the spider web. And we're bringing in all the best of the best of DD information, market information, everything that's around us, and bringing it to one spot, right to the center of the spider web. And that way, retail investors have one. It's basically like a one-stop shop. They can go to one place and they can learn about different tickers. They can learn different information, get different information that's going on around the world, information that's going on in, Wall Street and the stock market. And we are 100% all for retail, all about retail, 100% all in on retail. And that's what we'll continue to be. But I'd like to.
If I could say one last thing, I was going to say, I know for a new trader, coming on and looking at rocket ships on any sub, whether it be our CLOV, whether it be our Palantir, Wall Street Bets, anywhere. I know our CLOV does an excellent job of cleaning that up, but Wall Street Bets being the main culprit, and that being one of the biggest subs out there currently. The new trader can get absolutely intimidated by just seeing rocket ships, buy this, buy that. And that's why why the ball boys, I feel like it's such a great place for the retail trader, because it's, like you were saying, a one-stop shop that you can come get the best DD from everyone, and make your own decisions and educate yourself. So
exactly. Well, Chad, I want to thank you for coming by. Great information. Great talking to you. Glad you were able to sit down with us for a half hour, 40 minutes, whatever it was. But yeah, I just want to appreciate you for coming by.
Yeah, absolutely. I'm happy you guys having me on. And then, I look forward to seeing where the ball boys can go, because I believe the potential is unlimited. So
appreciate it. Thank you so much.
Yeah.
See you guys.